Welcome back. Big news and deal drama. Comcast reportedly working to make a hostile bid for the entertainment assets of 21st Century Fox, the parent company of the Fox Business Network. And according to the Wall Street Journal, Comcast is lining up the financing of roughly $60 billion to make an all-cash bid. Fox agreed already with Disney for a $52.4 billion deal in December. Joining us right now is CFRA Research Senior Analyst Tuna Amobi. Tuna, good to see you. Thanks for joining us.
Thanks, Maria.
Your reaction to all of this?
Well, I think it just speaks to how, rare these types of assets have become. And every time they come on the block, you're likely to see a potentially explosive bidding war. Scale. It's all about scale. So I think you should expect some type of reaction from Disney and or Comcast. Seems like the ball is now in Disney's court to react to the offer for Sky. If Comcast comes out with a sweetened all-cash bid for, for these assets, I think, there's really any number of ways that this could go. But ultimately, I think this is something that if you're a Comcast investor or a Disney investor, you want to be very careful. You don't want either company to do something, extraordinary.
Why would 21st Century Fox take this bid if it already rejected a similar bid, a stock deal in the low $60 billion range? Why would they turn around and take this one just for the cash?
Because Comcast was there, and they said no to Comcast. So what's different now?
Well, remember, there's still this unknown overhang of what happens with the UK regulatory review. There is no definitive resolution as to whether the regulators in the UK would prefer either Comcast or Disney. I think both companies are trying to ease those concerns so that ultimately...
but that's about Sky, right?
That's right. But remember, the Sky itself is part of the mix that Disney has offered. So they have not, to this point, been able to carve out Sky from Disney's offer for those assets. So that creates some kind of potentially complicated valuation questions. You've got the regulatory issues in the UK. And then you also have the issue of breakup fee. I don't think the original offer that Comcast made, I don't think there was any contemplation of breakup fee. This isn't something that I think would be acceptable to Rupert Murdoch to go all the way and then ultimately have regulators kind of nix the transaction. The other big unknown is the Time Warner AT&T transaction. Mm-hmm. As you know, that's the decision on that could go any way, and I think I would argue would affect how this all kind of shapes up.
And that ruling comes June 12th.
June 12th.
Correct.
So are we in limbo until June 12th then, until understanding who gets these assets?
Yeah, whether Comcast steps up and to what degree.
That's right. I think that's something that
because they
Comcast...
wouldn't make the bid. It looks like that antitrust regulators are going to go after any deal like that, and it would get, if this AT&T Time Warner deal gets shot down, it wouldn't. Right? Would Comcast make the bid?
It would significantly affect Comcast's motivation to go forward.
But does it impact Fox Disney?
I don't think
an antitrust deal against an antitrust decision against Time Warner AT&T, does that affect Fox Disney?
I don't think it does, because that is a horizontal integration.
Right,
that's what I thought.
Yeah. Disney Fox's entertainment assets, right? When Comcast, you actually have the delivery mechanism.
That's right.
That complicates it.
That's absolutely right.
Do you think either side is ultimately going to have to sweeten their bid? 60 billion, 54 billion. If they're bidding against each other, are we going to see higher prices?
I think it's inevitable, right? But, I don't think that Rupert actually wants to, as ironic as it seems, I don't think they want an all-cash transaction necessarily. The deal that Disney has put forward allows, Fox shareholders to have 25% of the combined entity. And when you see how Disney is knocking the ball out of the parks, whether it's Black Panther, Avenger, all these franchises, I mean, why would you really want to kind of walk away and not participate in that upside?
Which is why they said no to Comcast in the beginning.
Correct.
Rupert wanted to be with Disney.
That's right. I think there's a preferred intent for, Disney as kind of a preferred
Well, what are some
partner
other
here.
ways that Comcast could sweeten the deal?
Well, I think first off, I think they can, project a significant breakup fee. That, the absence of that would be a non-starter, I think, for Rupert. And also, I think if they're going to go all cash, I think Comcast has shown that they're willing and able to significantly increase the premium, as you saw in the Sky bid. So I would not be surprised for some extraordinary premium here in an all-cash deal, which would make it very difficult for Fox shareholders to refuse, frankly.
Yeah. Unless then Disney comes back and raises its bid.
Which is a possibility.
And now Disney is also slated to report quarterly earnings after the bell tonight. This is obviously expected to be big on the conference call, but the earnings are expected to come in at $1.70 a share on revenue of $14.11 billion for the company. Let's take a look at the stock and the pre-market this morning, Tuna. As you mentioned a minute ago, this company has been on fire as a result of these animation acquisitions that it made.
That's right.
Marvel and...
You know, when you look at the franchise pipeline of Disney, it's never been more robust, right? I think they've got a first-class problem here is that how do you really monetize these assets at the rate that they're creating them, right? It's Black Panther, Avengers, and this summer schedule is loaded. So
yeah, what a pace, you're right.
It's incredible. And I think that if you are a Disney shareholder, I think there's obviously concerns about ESPN, which are going to be, in the forefront. But now they've stepped forward with this direct-to-consumer offering with ESPN app and all that stuff. I think the question that investors are grappling with now is how Disney is able to make that transition from a traditional to kind of a new media, kind of over-the-top, direct-to-consumer. And I think that's really, if anyone can pull it off, frankly, I think it's Bob Iger.
How are their theme parks doing? That's a window into how consumers are behaving. Do we see a lot of strength on that front?
The theme parks are doing phenomenal.
They raised prices recently.
They did in February, and there's been no slowdown in traffic. Last quarter, they reported attendance at domestic parks up 6%. This has been really trending all-time highs. Internationally, Shanghai Park is coming up on its second anniversary. It's been a runaway success. Theme parks has really become, really one of the marvelous kind of, gifts that keep on giving for Disney.
Yeah, Parks and Resorts responsible for 26% of earnings in fiscal 2017.
Don't forget, in terms of Comcast versus Disney, Fox gets a voting opinion in the Disney deal, right? Not so for Comcast.
That's exactly right.
Yeah,
that's a very good observation, which kind of tends to get lost in the mix.
Yeah, which is important because I suspect Rupert Murdoch wants to be a vocal shareholder.
That's right, which is my point earlier, that it's hard to imagine him just taking the cash and walking away into the sunset.
Yeah, so you think Disney wins here?
I do think, but, it's going to get a lot more competitive, but nowhere near the price that we're talking about that they've offered. I think it's going to be much higher.
Tuna, thank you.
Thank you, Maria.
Great to see you. Tuna Amobi joining us there.